Bitcoin has just broken through its all-time high, surging past $112,000 today, signaling a major shift in global markets. Welcome to the Digital Finance Daily News Show, and what a day it has been. Nearly $5 billion has poured into Bitcoin ETFs this month, showing unprecedented institutional conviction. Technically, that breakout above $112,000 is a powerful signal, even with overbought momentum. This is not just crypto, it's macro. Bitcoin is now trading in sync with equities, yet misaligned with gold and bonds. The US just passed another massive spending package, swelling debt by over $3 trillion. Treasury auctions are flooding the market with T-bills and pushing yields higher. Meanwhile, President Trump has called for a Fed rate cut to 1% and is threatening new trade tariffs on metals and BRICS countries, creating fresh volatility. Copper has spiked more than 10%, stoking inflation fears. On the global stage, US and EU trade negotiations are making slow progress, yet tariffs on Japan remain unresolved, adding pressure to supply chains. US Treasury Secretary has even declined to attend the upcoming G20 Finance Summit, raising concern about transatlantic cohesion. Back in Europe, the Bank of England surprised markets by relaxing mortgage regulations to support first-time homebuyers, while cautioning that global instability could threaten UK financial stability. Meanwhile, Germany's industrial output unexpectedly contracted in June, and France's inflation remains stubbornly high, driving speculation about European central bank policy shifts. Asian markets are on edge. China's PMI data came in below expectations, hinting at slowing manufacturing, while Japan's core CPI remains flat, prompting the Bank of Japan to signal continued stimulus. In the tech world, Nvidia made history by becoming the first company to reach a $4 trillion valuation, fueled by demand for AI chips, yet that sector now faces headwinds from global trade tensions. Samsung also announced a major new chip fabrication site in India, a strategic pivot away from China. Turning back to Bitcoin, key resistance now lies between $112,000 and $114,000, while support sits around $108,000 to $110,000. If global liquidity and fiscal risk continue to drive markets, Bitcoin could push toward $130,000 or even $140,000 by year-end. But any shock from trade wars, central bank surprises, or equity volatility could trigger a steep pullback. So here's the takeaway: Bitcoin's record rally isn't about crypto, it's a barometer for global liquidity stress, fiscal excess, and market risk sentiment. Track interest rate debates, treasury auctions, trade headlines, and tech sector moves. They'll all reverberate through crypto. Will you ride this breakout or hedge with caution? Drop your thoughts. And if you want sharp daily updates on crypto, macroeconomics, trade wars, and more, hit like, subscribe, and share.